With big tech earnings like Google, Microsoft, Amazon, and Intel coming up on Thursday, are any of those names worth a buy? Welcome to Trading Nation. Your team today, Rich Ross, Evercore ISI, Mark Tepper, Strategic Wealth Partners. Remind me first, Rich, to call in sick on Thursday, because that's going to be a heck of a day. No, when we look at these names, when we look at your chart setup, obviously expectations for earnings and such are built into the charts. Which of those names, if any, might look attractive to your clients at Evercore ISI?
You know, Brian, I actually think large cap technology stocks are in an outstanding position going into this quarter's earnings. The fact that they've sort of underperformed, moving sideways here in recent weeks, is telling me that expectations aren't quite as high as you might otherwise suggest. One stock in particular is actually in an outstanding position uniquely. That's Intel. What I like about Intel, it's a stock on the come here. Look at the short-term chart, Brian. We're going to go back about a year, and you're going to see a very decisive breakout from sort of a frustrating sideways trading range if you owned the stock and watched other semiconductors and the SMH or the SOX index soar up over 25% year to date, but Intel just starting to come into its own. I love the short-term breakout, and then when I look longer term, I look at that multi-year weekly, we have an even more bullish setup. It's sort of a continuation pattern, a bullish ascending triangle. I think you can get to $50 on Intel. It's a stock that has lagged its counterparts within semis and tech more broadly, and it's ready to close that gap of underperformance. Intel is a stock to buy going into numbers and coming out of numbers.
Wow, a little love there for Intel. Mark Tepper, you and I have spoken many times on Power Lunch in the past. I know you have a fondness for Google, or at least had. Do you still believe in Alphabet/Google?
Yeah, we like Google. You know, they're really relying on mobile ad sales, YouTube, and cost controls right now to drive earnings while they try to ramp up revenues. Traffic acquisition costs are up a little bit, but they're balanced out by the faster sales that they actually enable, since it's essentially a referral fee. Internet advertising is huge. It's over a $75 billion a year industry just in the US alone, and it's growing at 15 to 20% year over year. And while traditional advertising still accounts for roughly 59% of ad spend, there's obviously this secular shift towards internet and mobile advertising. And basically in advertising, if you don't adapt, you die. And fortunately for Google, they're going to be one of the beneficiaries of that secular shift.
Now, are you concerned about earnings at all? Let's say they don't beat to the level that people expect, or they miss a little bit. Would you hold the stock no matter what?
This is definitely a long-term hold because, like I said, this secular shift in companies, my company in particular, shifting from traditional advertising into more mobile advertising, whether it's through Google or Facebook, this is a trend that's going to continue to play out over the course of the next decade. All
right, Mark Tepper, Google. I can't call them Alphabet. I'm still trying, Mark. I tried.
Same here.
I'll just reference the stock ticker, GOGL, and call them Google. Okay, Rich Ross on Intel. We are watching the breakout there on INTC. Guys, thank you both very much. As always, folks, thank you for tuning in to Trading Nation.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.